Hello traders, Gary Wagner with the gold forecast here on the weekend review, the 17th day of September. It is Friday, and as we say in Honolulu, happy Aloha Friday. What a week we have had in the gold market. Just incredible. Market moving over $30. It actually hit a high of $12.84 during the week. Forex gold currently trading under a little bit of pressure, down $1 to $2 or so at $12.74. Traders, we are looking at a weekly chart of spot gold. As I said, currently trading around $12.74. We've absolutely, without a doubt, taken out our historical high, and it absolutely appears, with very little time left in the spot market, that we're going to have a close substantially above that. Now, typically when we've reached these contract highs, we've had a meltdown of sorts. In other words, the markets come and immediately retraced. We witnessed it the last time we hit 1265, and we've witnessed it at other points. This is that first high that we hit at 1221 back in December of 2009. Now, am I looking for the market to retrace? Yes. Do I believe the market will retrace now? Personally not. I think that traders have their eye on that elusive $1,300. I think that they will probably drive the market up to around 1,300, maybe a little bit higher, and then I would look for a retracement when I see candlestick patterns and certain other indicators showing me that that is possible. But we've got to realize right now that there are rumors circulating that the Federal Reserve itself is going to have a what they call a easing round, a quantitative easing round. And also when you look at the economies overall in the different global world markets, they're not excelling. They're certainly not shining right now. So there's still the fundamental reasons that gave this market the impetus to push higher, I believe, are still there. Again, traders, we're looking at a daily chart. I've switched back over to our daily, and I want you to take note on a daily chart of the same thing we just talked about. If we look at, this is that record top at 1265. We had this significant close above it. This was a few days ago. On the following day, although we had that doji, it did close above it. Again, we had that breakout the other day here, and then today another small round of profit-taking breathing room. But most notably, today is when we hit this record all-time high in the spot market at 1284. For those of you who have been following my forecast for anywhere between 2 months to 6 months, know my underlying fundamental belief and my reason for believing that the gold market is destined for higher prices. My sentiment is, and has been, that as long as we have a financial and fiscal policy to stimulate the economy by printing more money, we put ourselves in a situation where the markets itself have nowhere to run but higher. And right now what we are seeing is, and this is according to the street, they issue the real reasons gold is breaking to new highs are the hedge funds and the Federal Reserve. The Fed will meet Tuesday and discuss interest rates, and although no changes are expected, the rumor, and I underline the word rumor, is that the Fed will run its printing presses and issue another round of monetary easing. Low inflation reading in the U.S. might also give the Fed a green light to pump more money into the system. Now realize, anytime we pump money into the system, we are creating a scenario where gold can do nothing but go higher. It's staying the same, but relative to other currencies, as the currencies lose their value, of course, gold will gain in the interim. Traders, I've kind of compressed our daily chart to give you a better indication of just how beautiful this run-up has been. If you look to see the last time we've witnessed this kind of a run-up, right in here, you can see that we do have more room to go. We absolutely have more room on the upside just in terms of the amplitude. My sentiment is that this market right now is going to take a run for 1300. Aggressive traders added to their positions. Conservative traders can go ahead and add to the position either today or on Sunday. I do recommend that we move our stops. And in terms of having that stop make sense, we've got to take a serious look because I do expect some gyrations in the market. And the first thing is that I'm really only comfortable placing it under here, which is 1240. But my recommendation is going to be actually to place it under all of this activity right in here. So 1230 on a protective stop, traders. Go ahead and move your stop up to 1230. Maintain your long position at 1255. And then your position again at 1274.50. The aggressive traders who put that on yesterday. This is our monthly chart of the cash gold market. And as you can see, we have had, in terms of the steepness of the angle here, an incredibly sharp angle and a move up over a period of time of about the last, call it, year and a half. This is July right here of 2008. This right here puts us at 2009. This is that record. The first record top here in 2009 of December 2008. And as you can see, the market has utterly moved in a degree. In other words, the angle of attack has significantly increased from that of this rally here, or of course, this slow move up here. I think that this acceleration is extreme. And what I personally would like to see is the market begin to move up, but move up a little bit slower. The slower the market moves up, the better I feel, because that gives me a sense or less likelihood for the market itself to have that kind of parabolic meltdown. I don't think we're going to see that. I think that right now, in terms of our technical signs, you're going to get an increase in volatility. However, I think this market is destined and will move to 1300 prior to this market retracing. One thing that we do want to note is we do have November COMEX options expiring next week. And there's supposedly a pretty good little battle between those who have the 1250 and the 1300 strike. So we want to kind of see how that pans out. I think that will increase the volatility, but it will not change the overall direction of the market. My belief is, as you know, we're looking 13, 13 and a quarter. And we'll see what happens as it approaches that and see if the market is going to move up through that area without a retracement, or if we will see some sort of a retracement before we hit that mark. But traders, I absolutely believe that $1,300 gold, it's not so much if we're going to get it as when. This has been a great and fascinating week. Thank you, traders, for allowing me to come into your homes and allowing me to give you my ideas and hopefully give you information that has allowed you to be a success, or a more successful trader, I should say. This is Gary Wagner wishing you, as always, great trading, and we'll talk to you Sunday for the Daily Report. Bye-bye.
When I look out my